Okay, now with that little introduction, let's go ahead and get started into our new entries for the month of January for Stewarts Bakery. The first journal that we're going to work with is called the Cash Receipts and Sales Journal. And we're going to record 3 different types of transactions into the Cash Receipts and Sales Journal. Just because for different types of needs, they have different types of transactions. Not only do they have a cash register for the counter sales, but when a company calls up and orders loaves of bread to be brought over, they might ask for 2 dozen loaves to be brought over. They're going to handwrite those out, because most of those are going to be on an accounts receivable basis. And then we'll also show cash receipts. So let's do, what I'd like to do is one of each of these in the Cash Receipts Journal, just so that we see how they're put in. Now there are 3 types of sales I mentioned just a minute ago. And we're going to not call them wholesale or retail, but for tax purposes, we're going to call them taxable and non-taxable sales, and then catering sales. This first invoice is to Rainbow Grocery. Now, the information that we're going to transfer onto this is we're going to, of course, put the invoice number, the name, but then on the left-hand side, as you'll note down below, it says that we charged it to a charge account. Okay? So we need to go to the chart of accounts that's found on page 3.5, or the back side of that invoice that you're looking at, and we need to figure out which account that charge account is. What is it? It's accounts receivable, so it's going to be account number 220. We're going to put that in the miscellaneous column on the left-hand side with the amount to the right of it in the amount column, and the amount that Rainbow Grocery owes us is $258. Okay? Now, why did they owe us? Oh, by the way, on that invoice it says charge account number 4. That's not the account number for the general ledger. What is that? Yeah, that's the account customer number for the subsidiary ledger. So don't be fooled by that. When we get to the subsidiary ledger, that number becomes important. But it's account number 220, accounts receivable, on the left-hand side. Now, on the right-hand side, we've got to identify, is it a taxable sale, non-taxable sale, or catering sale, right? Okay? Yeah, non-taxable. How do you tell whether it's taxable or non-taxable, do you think? If they charge tax or not, that's it. Yeah, it's pretty simple to figure out which ones are taxable and non-taxable. So this is a non-taxable sale, so we're going to put $258 in count 400 as a credit. Okay? That was pretty simple, wasn't it? That's all we have to do with that entry. Okay, now what I'd like you, the rest of them, I'm going to have you go ahead and do when we release you to do it. But would you just in the invoice column number down to invoice number 1014? So just allow space to put in all those invoices. So number 1001, 1002, 1003, and so forth, down to 1014. Okay? That just gives you the space there so that we can do the next transaction, which is going to be the counter sales for January, found on page 3.8. We didn't make a deposit every day, but this is from the cash register. So we might accumulate and only run every few days a cash register tape. We need to enter in the counter sales for January 2nd. So on the next line after invoice number 1014, put in the date, January 2nd. In the description column, put counter sales. We're going to put this money directly into the bank. It shows our deposit as being $1,325. So that's going to go on the left-hand side. And on the right-hand side, we're going to record where it came from. 75 of it was sales tax. And retail sales, are those taxable or non-taxable sales? Taxable sales will be $1,250.
What was the reference number on that, or is there a reference?
There isn't a reference. But normally what we'd use is a Z-tape number. It's not provided here. You could just number it 1 if you would like, if you'd like a reference number in there. Okay, go ahead and in the date column now, allow for the next, put it 1 row for January 2nd, 1 for January 3rd, 1 for January 4th, then January 8th, January 12th, January 18th, January 22nd, and January 23rd. And that brings us down to the third set of documents that we're going to record here, and that's the cash receipts on page 3.8 of the right side. The first one we're going to enter in is January 9th. The cash receipt number, this is going to go in the row just below that last date that you put in. The cash receipt number is 8393, so that goes in the reference column. And the name or description is Sally's Cafe. Now, why is Sally paying us $386? Yeah, she bought something last month and put it on account, and now she's paying that account down. So we're going to, on the left-hand side, debit the bank, because that's we got. The fact that it's a cash receipt says we got the money. So we're going to debit the bank of $386. On the right-hand side, what are we going to credit? Account 220, accounts receivable. Very good. Account 220, accounts receivable. Because she's paying her account down. Do you follow that? Okay. And that will be all three of them are payments on account. So they'll all look the same. Since we do not have a column for 220, we're going to use the miscellaneous columns at the far right to do it. Okay, now one other point I wanted to make before we leave these. There are 3 types of sales. We've only talked about taxable and non-taxable, but in some cases the sales invoices are for catering sales, and that's a separate sales account. That is account number 415. Now let's find the catering sales on here so that you're not confused when you get to them. If it says we served people and it shows the number of meals, that's a catering sale. Okay? And so you've got dinner service on invoice number 1009 is catering services. Now, yeah, some of the catering there's no tax and some there is. Okay, it depends upon who we're doing, but we're still going to recognize them as catering sales. And when we do our tax report, we'll have to go back in and analyze which ones were tax-free and which ones weren't. The question is what determines whether you charge them tax or not. Really, it's the legislature that determines whether we charge them. But some organizations are tax exempt. Okay, so you got 1009, 1010, that's catering, and we also have 1013, and notice that's not a tax exempt organization. It was a wedding breakfast, and so we did charge sales tax there. Okay, questions on that first one? That one's going to take you the longest time of any of them. Okay, the rest of them go fairly quickly.